All right, let's get right into this explainer and decode the urgent, highly conditional signals coming out of today's Asian close. We're not just doing a regional wrap-up here, guys. This is literally setting the absolute stage for tonight's US Open. The data we're about to unpack shows a massive tectonic shift in how major capital is playing the entire AI boom. We are finally moving from just the expectation of AI spending to verified, hard data. And trust me, the market's reaction is going to surprise you. Now, if you only glanced at the headlines today, you probably saw a massive 3.68% jump in the KOSPI. And, on the surface, that looks like a huge, broad victory, right? Like a rising tide lifting all boats. But honestly, it's a total illusion. It's completely masking a ruthless, highly selective repositioning happening right under the surface. Because when you actually look at the underlying market breadth, it was incredibly narrow. I mean, think about this. Out of 948 stocks in the index, 732 of them actually declined today. Let that sink in for a second. The index has one of its best days of the entire year, up nearly 4%, but almost 80% of the actual companies are bleeding red. That is not a broad rally. That is a highly targeted, concentrated strike of capital. And what happened is capital got heavily concentrated into a very specific band of AI collaboration large caps and essentially abandoned the rest of the market. You've got this tiny island of green mega players surrounded by just a massive ocean of red. Big money isn't just blindly throwing cash at tech anymore. They are placing hyper-specific, highly calculated bets. Which brings us to Section 1, AI CapEx confirmed. We are officially seeing verified hardware demand. So what exactly triggered this aggressive capital shift? Well, we had three massive catalysts hit at the exact same time, basically creating a perfect storm. First off, Dell verified hardcore hardware demand in their Q1 results, which shot their stock up 34%. Then, Korea printed their May semiconductor export data, hitting a literal all-time record of 37.16 trillion won. And to top it all off, the startup Computex and GTC Type A just sparked massive anticipation for direct NVIDIA partnerships. The whole supply and demand loop for AI completely validated. Moving on to Section 2, the SK Hynix divergence. Let's break down this massive institutional split. Now, this is where it gets incredibly fascinating. You would think perfect macro data would lead everyone to the exact same consensus trade, right? No way. Instead, two massive blocks of capital violently disagreed on how to play this, specifically when it came to the absolute undisputed king of AI memory. Look, everyone knows the semiconductor cycle desperately needs these physical HBM3E chips to fuel NVIDIA's AI infrastructure. The hardware reality is completely unquestioned. But the financial reality of who actually wants to hold this stock right now, that completely fractured. Just look at this staggering divergence. Foreign investors aggressively dumped over 1.7 trillion won of SK Hynix spot, like the actual direct shares. They wanted out. But then domestic institutions stepped in, absorbed absolutely all of that selling pressure, and bought even more, over 2 trillion won of the exact same stock. So we've got foreign whales and domestic gorillas taking multi-billion-dollar opposite sides of the exact same trade, on the exact same day, at the exact same price. All right, Section 3, the next AI trade. Let's look at the strategic reallocation. See, those foreign investors didn't just pack up their cash and go home. They immediately reallocated it. They wanted to keep their AI cycle exposure, but they changed their vehicle. So instead of holding this super expensive direct stock in SK Hynix, they rotated into holding companies like SK Square. Why? Because SK Square owns a 20.1% stake in Hynix. It's a brilliant arbitrage play, really. They keep their semiconductor exposure, but get in at a much lower entry cost, effectively dodging that fully priced in premium. At the exact same time, they pivoted heavily into physical AI and robotics names on the KOSDX. Companies like Robostar and Rainbow Robotics. They're actively front-running potential collaboration announcements from NVIDIA's robotics lead, Madison Huang. Basically, the foreign money is saying, look, the chip premium is totally tapped out. Let's go buy the hardware and robotics that NVIDIA is going to partner with next. But domestic institutions? They took a completely different path. They poured their cash directly into the AI collaboration large caps. We saw huge spikes. LG Electronics up nearly 30%, Naver up 16%, and Samsung Electronics up over 10%. They are literally betting the house on direct partnership announcements during Jensen Huang's upcoming trip to Korea. Now, here is the hidden signal that proves everything we just talked about, the currency tape. Usually, if the US dollar index falls, the Korean won should strengthen, right? But today, the DXY fell 0.1%. and yet the Korean won actually weakened by 1.81 against the dollar. That absolutely proves the foreign sell-off was a real cash exit that required actual currency conversion, not just some internal portfolio shuffle.
So, it all boils down to one simple question. Who is right? We have foreign investors ditching the spot market for cheaper proxies and robotics, and domestic institutions making multi-billion-dollar bets on large-cap partnerships based on the exact same catalyst. The burden of truth is shifting straight across the Pacific.
Section 4, U.S. Market Validation. It's time for the final verdict.
You've got to treat today's Korean market move as entirely conditional until the U.S. session weighs in tonight. Asian markets place their bets, but Wall Street is the house, and the house always gets the final say. If you're tracking this live, your immediate line in the sand is 30,497 on the NASDAQ futures. Stay above that, and the institutional AI thesis holds water. Drop below it, and those massive long positions taken today are going to face severe, immediate mark-to-market pressure. To even survive the night, the market has to navigate a total gauntlet of Federal Reserve speak. We've got Kashkari early in the morning, followed by Fed Chair Jerome Powell right at the open. If either of them gets hawkish, it's going to strengthen the dollar, spike the 10-year yield, and absolutely crush both of those institutional AI legs at the same time. But if Powell comes out neutral or dovish, that Korean signal stays valid and the AI run keeps going. And finally, tonight's ISM manufacturing and prices data is going to act as the ultimate judge. The market is eyeing 85.3 on the prices metric. A hot print above that consensus, that validates a hawkish rate path, which severely threatens the whole capital structure domestic institutions just built today based on future growth. Conversely, a cool print gives them a massive green light. It's exactly like analyst Lorisha pointed out. When an AI capex signal is already in spot prices, it triggers a simultaneous rebalance. It's a perfect reminder that a rising index fueled by narrow conviction, like we saw with today's big KOSPI jump, usually masks deep structural vulnerability. When catalysts are fully priced in, capital doesn't always just leave. It fractures and hides. The capital is completely split, the macro data is looming, and the trap is officially set. So here's the multi-billion-dollar question to leave you with. When the opening bell rings in New York, will the market validate those bold institutional longs or vindicate that calculated foreign exit? Thanks for joining this explainer. We will see how it all shakes out tonight.